Mark, not to put you on the spot, but you are kind of a big deal. And I knew that. But it's so funny because you're like a big deal in a space that's kind of intimidating to a lot of people. Like you hear tax, legal, it's like the big words that a lot of solopreneurs dive into and they're like, ooh, I don't want to have to do with that. You have made such a name for yourself in this space. So we're just so happy to have you on the show today. Welcome.
Well, thank you. I'm a big deal amongst nerds. And that's, I can crack that crowd and, work that. I can play around with that all day long. I love it. And so thank you for that. But this, you know what? Everybody's got a little nerd in them. Because if you're a business owner, if you're an entrepreneur and you're trying to live the American dream, this is an area you got to tackle, and it's hard to get a straight answer or make sense of it.
I'm psyched. We're going to be going into capital gains tax rates today.
Oh, fun. Okay. All right. Woo. Boy, let's take the lid off, man. I mean, woo. You're turning me on now. Stop it. Stop it.
And here I am like, let's talk fantasy football.
Yeah. No.
The peanut gallery. Let's start with what people are doing wrong. Because I feel like if people are just tuning into the show and they're like, okay, I know what I should be doing. People keep telling me what I should be doing. Let's start with common mistakes that you see people make, whether it relates. Let's go with taxes specifically. What mistakes do solopreneurs make?
Well, we can, I like that. And we can get into a couple specifics because I want everyone on of your listeners to walk away with a practical tip that might impact them. Not everybody has the same scenario or fact pattern, but I'll do my best on that. But here's one that I think really is one of the biggest mistakes that impacts so many people is that business owners, investors, they're looking for or think they have the accountant that takes care of everything, and they can just say, oh, it's all done, and I don't have to think about it. And they're like, oh, if I could just find that tax guy or tax gal, and they'll just take care of all of us so I don't have to worry about it, or I don't have to think about it, or they'll just do it all, or they already have that person they think that's doing it all for them perfectly. It is such a fallacy because we have to be the captain of our own ship. We have got to get engaged as business owners in the conversation of what is my tax strategies? What are they? What's my plan moving forward? What's my legal structure look like? How many rental properties do I want to buy? Where are my investments? What tax rate am I paying? And what bracket am I in? Or am I paying my kids properly? Am I writing off my trips? Am I doing more board meetings? Am I writing off my auto properly? Am I writing off my home office? These are not hard topics, believe it or not. But the mistake people make is they don't get engaged in it. They're intimidated by it. Like you said a little earlier, they think it's complex or boring. And so they think they can find that person that's going to do it all for them magically, and they don't have to worry about it. And they leave money on the table, and they think someone else is thinking about their stuff, and they're not, because unless you're paying them to think about it, they're not. And you've got to think about it for yourself and be that captain.
So Mark, you just said, and these are not hard topics, but au contraire, those are hard topics for some people. And so
no, when I'm done with them, I'll freaking break it down. You choose one.
Fair. And we will have links to all of your resources after this. But let's say people are getting an accountant because they don't know what they don't know. They're just trusting somebody's going to take care of this. So how do they catch the errors, and how do they know that they're not doing everything they should be if they don't know what they're looking for?
You bet. No, I want them looking for that tax advisor, keyword, not tax preparer, someone that's not looking in a rearview mirror, but they're actually looking forward with you on the same side of the table. I want you looking for that person, but you're going to be looking for a person to engage with. That's all I'm saying. So we need to find that person. And how do we know we've got the right person or we're on the right path? You're going to have a conversation. You're going to go, hey, I'd like to write off my home office. How do you feel about that? Oh, I've got kids under age 18. I'd like to integrate them into my business. Oh, I'm going on a trip this next month. I'd like to have my annual board meeting for my LLC or my corporation. What do you think about that? Oh, I have an S Corp. What should my payroll be? Those are just 4 questions right there, just off the top of my head. And when you ask your advisor, an accountant, those questions, if they look like a deer in headlights or they don't have a rational answer, you have the wrong person. You have the wrong person. And you should know just enough to be dangerous that, yes, every business owner should be writing off home office. Every business owner should have their kids on payroll. Every business owner that's making more than 50 grand a year should have an S corporation. These are basics that we don't have to know where they go on the return, and we don't have to be able to get on a whiteboard and explain them. But it's amazing how many people interview their accountant and they know more than their accountant knows.
Can I give an example of this? Because the other aspect of this is when it's your business, you're thinking in a way that maybe even a really good tax advisor isn't. And I'm going to give you an example. So years ago, I was in the real estate development business. I did shopping centers, and I had an option on a large piece of property, and I was buying it in pieces and selling it off to major retailers, building a shopping center with what they call shadow anchors. So I was going to carve off this piece and sell it to Target. And the structure of that deal that was being put together by the attorneys and the tax advisors was I was going to basically buy the property from the landowner and immediately sell it.
You're wholesaling. Love it.
And immediately sell it to Target. But guess what? I owned the property for, a minute. So short-term capital gains tax rate. So, everything's, and I'm going, wait, because I'm looking at the tax bill. I'm calculating the tax bill going, woof. So I said, well, why can't I sell Target the option? I've had that for more than a year, then let them execute it and buy the property. Then I'll be selling something I held for more than a year. And they went, oh, interesting. And we did that.
Okay. Well, I love it. But I wouldn't have done that. Let me give you another strategy. No offense. I love your thinking. You're thinking out of the box. I love your story. But I wouldn't have wanted you to even do the deal. I would have held that option in your IRA, your Roth IRA. So when you
I had other owners.
Oh, okay, that's cool. Your portion. So this is what Mitt Romney did with now over $100 million Roth IRA. Peter Thiel with a $6 billion Roth. We have one client with a $400 million Roth IRA that started with $5,000. And it's interesting you bring up the story. It was in commercial real estate. So when that option was available and the $5,000, $10,000 option or partners that you joined with in an LLC, you don't do the deal. Your Roth is the member of that LLC with your portion of the option agreement. And then when that transaction occurs to Target and it's blink of an eye, all of that money goes tax-free into your Roth. Zero tax forever. And so many of our clients that are doing deals, we're saying, hey, just once in a while, peel one off. This is a big mistake on this note, Carly. People are doing deals in their own name. Stop it. Start making more money in your Roth IRA tax-free, and that you can have a tax-free ATM for the rest of your life at 59. So anyway, I appreciate you bringing that story, Joe.
I'm glad that it led us there because that's a really interesting thinking. I'm going to have to ponder whether it would have worked in this particular situation, but I like the thinking, and I never would have thought of it. So great stuff.
Joe,
I love it. And I love your creativity. And Carly, that's part of the problem is that people are not engaged in the conversation. And Joe was like, hey, I want to talk about it. I got some ideas. Heaven forbid. But accountants are egotistical. They're demeaning. And if you come with an idea and they didn't bring it, they're not going to jump behind you and cheerlead. They're going to be like, well, since it wasn't my idea, I got to find out why that's a bad idea, right?
I got to stick up for my accountants. They didn't do that. They went,
okay.
Wow, didn't think of that.
I want to circle back to the previous question that led us to these discussions about the mistakes, because we're talking about accountants specifically. Is a big mistake not hiring one? Like, can people, specifically solopreneurs, since some of them are small, some of them are big, at what point do you need to bring somebody on? And what mistakes are people making when they don't have an accountant?
I was just going to say, if they're an entrepreneur, a solopreneur, they need an accountant, period. Now, if you're just a W-2, I don't want to say just a W-2 wage earner, but I've got a friend that he's a mid-level exec at Verizon and big fat W-2, has a home, does this, does that. I can't move the needle. There's nothing I can do. That's it. He could do it on TurboTax and get the same result, for crying out loud, even if he's making $1 million a year. But once you have a side hustle, once you've got a side gig and you're a solopreneur in any way, shape, or form, and you've got a Schedule C and Charlie, and a good tax advisor should be able to drum up, $3-5 in write-offs? Just easy stuff. Well, if you're in a 20-30% bracket, I just saved you $1,000. Because did that 1,000 pay for that advisory relationship with an accountant moving forward just on one freaking write-off, or a conversation about the Roth IRA on a real estate deal or whatever? And so we need to, every entrepreneur should have a tax advisor relationship where they meet quarterly, and it may cost them $3-5 a year or $2,000 a year, but it's going to save you 3 times that in tax, and it's going to make you 10 times that in wealth.
Yeah, such a good point. I also wanted to circle back on something else you had said when we were teeing up the real estate development. And you were saying if you're making over 50 grand, you should have an S Corp. And I think a lot of things that solopreneurs get hung up on is they're like, okay, I'm starting my own business. They immediately go to LLC. Like that's what I've been told, LLC. Why S Corp? I want to know, just when people are setting up their business structure, what do they need to be thinking about?
You bet. This was going to be one of those technical mistakes millions of small business owners make beyond not captaining their ship. So let's get into it. The S corporation, S is in small, is a status that allows you to split the net profit in your business between a W-2 and pay your fair share of Social Security and Medicare and and profit, or just plain old goodwill pass-through income. An LLC does not allow you to do that. Now, you can take an LLC and make an S election. So when people go, well, I have an LLC, I'm screwed. No. You can make an S election. Now, it's really expensive. We charge about $250 to convert an LLC to an S Corp. That was a joke. So the point is, you take this. Now, let's start from the top now. If I have an operational business and I am netting, meaning making profit, not gross income, but after all my expenses, making profit of more than $50,000 a year. If I have just a plain LLC or no entity at all, I'm going to pay self-employment tax at 15% on that net profit. Let's say it's 50 grand or more. Bam, that's $7,500 in extra FICA I'm going to pay right off the top. If I convert to an S corporation, take my LLC and make an S election, or start with an Inc. or PC or PLLC to begin with, now I'm going to split that profit. I might go 50-50. So I'll take 25 grand in a W-2, 25 grand in a pass-through. And now I just take that 7,500 and split it in two. I just saved $3,200 plus dollars. Now, accountants listening right now are freaking out, and they're probably down in the description with their fingers on the keys, ready to type that Mark is speaking heresy. You cannot do reasonable comp on a 50-50 split on 50 grand. I just want to tell you accountants out there that are about ready to throw something out the window. Pause and hear me out. I teach classes on reasonable comp. I write books on reasonable comp and small business strategies and S corporations. I have matrices to help you get there. I do not sell software to do it. It is not that hard. Way too many accountants are conservative on this strategy. You as business owners, if you're making more than 50 grand, already have an S corp, chances are you're paying way too much in FICA. I go to every CE course that I can on reasonable comp. I have read every court case on reasonable comp. And in 20 plus years, I have never, ever, ever had a client audited for taking too low of reasonable comp. So accountants, maybe you're a little too conservative. Maybe you could be saving your client more money on FICA. And that's just and we could dive into that. We could talk about it for an hour here, but that's one of the mistakes too many business owners make is they don't understand the S Corp or consider it.
Quick, dumb question. So you've got 50,000 in profit. You take 25 as a W-2 and 25 as basically, just profit. And why wouldn't you do 50? What wouldn't you be better off doing the whole 50?
Okay. Now there's a great question, Joe. At the end of the day, you still took 50. When you make money in your small business, people, you take it. I don't want you to get a paycheck. I know you. I'm a small business owner. Your profit is like this throughout the year. It's up and down. You don't know when you could take a paycheck or not. Don't take a paycheck. What we're going to do is a quarterly report, and in the rear view mirror, choose how much of that should have been payroll. You're still going to take 50 grand at the end of the day. We're just going to call on paper W-2 and on paper pass-through of whatever ratio, 25-25. And so you take home the same amount. You're just going to have them on different lines on your return. Joe, this is how you launder money. Have you not, you haven't done this? I mean, I'm just...
Okay. Occasionally, I leave some in my pocket of my jeans, but so I've laundered a little bit of money. But.
No. But that's it. So on paper, you don't want to take it all in payroll, or you pay $7,500. You don't want to take it all in pass-through, because you have to take reasonable comp. So that's where the IRS is all over.
Okay. Now I'm seeing the model.
You see the difference? Yeah, I may have a dentist come in and he's like making 200 grand. I'm going to take salary of $10,000. No, you're going to get audited. I have a matrix. We're going to take reasonable comp. But again, accountants are far too conservative.
Got it.
Okay, so Mark, you just have all these little, such good pieces of information.
Thank you.
What other hacks do you have for people that let's go with side hustle specifically, because a lot of our listeners are just starting their solopreneurship. They might still have one foot in the door in a company that they've been working for. What are some of your hacks, like tax and legal hacks for them to focus on?
Well, first of all, don't quit your day job. I am not the type that says, when I have a client walk in and they're like, hey, I quit my job, I'm starting my business. I'm like, no, don't do that. No, let's start that side hustle, side gig, freelance. See how it goes. Start building it, developing it, nurturing it. It's a child. You may not be ready to take profit out of it. A lot of people are like, well, my business failed. I'm like, really? You took every freaking dollar out of it you could to survive. It was premature. You killed your own business. You got to let it matriculate and grow. Let it go through its adolescent stage and teenage age and become a young adult. And then it can support you. Maybe it's 3 months from now. Maybe it's 3 years from now. But don't, suffocate your business, sucking out the profit too soon. So my first point is, please start the side hustle. Please catch the vision of the American dream. Keep the day job. Now, if you're married, one spouse might have the day job. The other one starts the small business. Ooh, very synergistic. And we could be working together synergistic. We want to work together to bring the side hustle and day job and the benefits of both of those together. But learn about it, grow it, get familiar with it, get familiar with QuickBooks, learn the strategies, catch out my podcasts and my books and articles to just kind of start learning. We don't learn this in school. Our parents didn't teach us around the table. It's the school of hard knocks, and Main Street America is alive and well. So don't beat yourself up. Don't be intimidated with what you've got to learn. Just start on the path.
Yeah, no, so don't leave the day job, but like once, let's say their business is growing, what other, like, do you have any other legal or tax, like what should you do tax wise?
Okay, so I'll give more tips. I'm not trying to be cagey. I do love starting with the LLC, limited liability company. It's not limited liability corporation. Every small business owner that's got a vision and they're going to hit it and they're going to go, start with the LLC. Let's start getting the EIN, the banking, establishing the credit. Let's get the QuickBooks going. Let's start learning about bookkeeping, because you're now the steward of an idea. And so let's start to respect it from a legal standpoint. Let's do our minutes every year, get our board of advisors set up, boom. Now, on the tax end of things, we want to start taking advantage of every tax write-off we can. We want to dedicate a credit card, start building points maybe. We want to dedicate a credit card to the business. We're going to use the debit card from the banking for that business. We're going to start getting used to that. We want to write off dining, electronics, equipment, travel, auto, supplies, home office, get the kids on payroll. Maybe we put my spouse on payroll. And we're going to start learning those little techniques. I have podcast after podcast on every one of those techniques. After one podcast, you're like, oh my gosh, I understand it now. My accountant's been making it sound like, the Wizard of Oz, and they're behind there pulling levers. And they do that for some, not all. You had some good accountants in the past, as you said, Joe. But others accountants, they kind of keep that close to their chest. And they want to keep us confused and in the dark, because then we have to pay them and lean on them. People, you can know this and very easily command and lead your professionals without a lot of headache and a lot of confusion. So all of those little tax strategies, to bring it together, Carly, is you're going to start practicing them. And you're going to start learning what's a write-off and what's not. If I go into Best Buy, I'm going to use my business card. If I go into Nordstrom to buy more underwear, I'm going to use my personal card. If I'm going to go to the iStore to buy a new laptop, I'm going to put it on my business card. If I go here, so you're going to learn what's personal, what's business, and you're going to learn all the kick-ass write-offs.
Yeah, no, those are great. And I love, like, we've been talking about places you can save and everything. For solopreneurs that are just starting, do you have any tips on how they can make more money at the beginning?
Oh my gosh, I love it. So I have a workbook I created about 5-6 years ago. I'm working on a refresh right now, 8 steps to start and grow your business. And if I'm not passionate about tax and legal, my next love is marketing. I love trying to build a business, trying to create more revenue streams and that sort of thing. So what I would say is this is a great question. For the small business owner that's just starting, get good at that one thing. Start making money at it and really fine tune it. Understand it. Understand your avatar, your target market. Get good at producing it as efficiently as possible at the lowest possible cost with the highest value to your customer. Practice that. Start building your brand. Start really making your presentation of that product or service, even if it's you only have 2 or 3 customers, maybe you have 200 or 300 customers, whatever it is, get good at it and really understand it. Get that humming. It's kind of like a little car. Before we go to second gear or third gear or fourth gear, let's make sure it's running well. We're changing the oil. We're on top of it. We understand what we're driving. We're learning the rules of the road. Then I can start scaling. Scaling is a wonderful way to, I'm going to hire my first assistant. I'm going to hire my first employee. I might start expanding with other service lines or product lines. I'm going to expand my website. I want to make money while I'm sleeping. What could I be doing on my website to make money in packaged education, packaged products or services, starting to use third-party vendors and third-party employees or virtual assistants, So scaling is a process of these breakpoints of how do I get to the next 100 grand? How do I get to the next million? And once you can at least keep the car on the road and be profitable, all those other avenues open up. And don't beat yourself up. It's not a race. It's a journey. So don't compare yourself to others. Just start doing what you know, do it well, and enjoy it. It's your business. You get to love it. You get to bring it the way you want up through its stages.
I love how you kick that off with, if I'm not passionate about tax and legal, because I love your enthusiasm for it. You've been talking about the one thing that I meant to ask earlier that I forgot when we were talking about like tax and legal setup and everything is you were saying that you stay up to date with continuing education and you do a great job with that. But for people that are running their business and it's not their livelihood to do all this, how can they stay up to date with changing tax laws and stay current? Like, because what if they're like, oh, I figured it out, and then something changes? And again, you can say that that's the accountant's job.
Ooh,
but maybe
very good.
They don't always catch it.
Yeah, very good question. Because as I said a moment ago, hey, learn it. Captain your ship. The second mistake they make is, okay, I learned it, I'm done. Whoa, did you know that there's going to be another tax code no matter what president is going to get elected this fall? Did you know that the Tax Cuts and Jobs Act, the last pieces of it expire the end of this year? Did you know that there's a new court case last week somewhere that changed the whole dynamic with this type of write-off? So the point is we have to stay abreast. We have to continue to learn. So what I would tell people is find that voice that resonates with you, that you enjoy listening to. Some of you listening today are like, that Mark Kohler is crazy. He's got ADD. I cannot listen to that guy. Take away that rock star he's holding. It's not healthy. He's going to, Others of you are like, oh my gosh, I can understand this guy. Freaking A. So I've got a podcast. I've got a YouTube channel. There's other tax professionals out there that have some great voices on strategy in different say groups or industries even. Find those voices and just subscribe. Listen to a podcast once a week about tax and legal. I do every year in the fall. Oh, it is busy. Our busiest time is November and December. A real accountant, that's their busy time because everybody's trying to get their write-offs in before year end, their strategies, pull the trigger, get ready for the new year. April 15th, freaking A, I can punt. That's first quarter. I don't care about April 15th. I don't care about the deadline. That's reporting from last year. Strategy is looking forward. And so I'm holding podcasts on year-end strategies all through November and December. I've got a workshop this December for 3 days on 25 different topics, 15 different speakers. You can come in virtually or personally. It sells out every time. This year is going to be in Phoenix, December 6, 7, 8, I think. And it's called Tax and Legal 360, where business owners and professionals are interacting and working together. Come to a tax conference. Look how cool and nerdy that would be. But anyway, so find someone that's an influencer or a thinker that is out there on this topic and start following them and just know it's an ongoing topic that you have to continue to learn in. And it's okay. It can be fun and exciting.
And Mark, you just mentioned so many good resources, your podcast, your event, everything. Just while we're on the topic, where can people find all of those?
One of the best places to go is just markjkohler.com. Markjkohler.com. There's a link to our law firm. You can get a consult for under $1,600 and build a plan with a real tax lawyer on Zoom, a comprehensive consult. We go through 35 different strategies and review your past and look at the future, build a trifecta. It's a picture of what your future might look like. I've trademarked that, the trifecta. You can get to the trust company where you can self-direct your IRAs and 401ks and health savings accounts. You can get to a tax advisor network where you can interview and find a tax advisor that's been trained by me. They have to do 80 classes and over 1,000 test questions and meet with me weekly to be on my network. I make no money on them. You hire them, that's cool. That's on you. But they get trained by me. That's the Main Street Tax Pro Network. You can find an accountant there, sign up for the podcast, the newsletters and all that, and just enjoy it. Just enjoy the ride and know that this part of your business can be now managed. The number one cost in your life, the number one cost throughout your entire life is going to be taxes. Are you talking about it? Do you have a plan? Who's your advisor? Do you meet regularly about it? Because it's the number one cost. We ought to. Let's find that person, that tribe, that community.
Ugh, I want to go like run a marathon after talking to you. I'm just like, well, Mark, we asked all of our guests this question. Did you help so many people find success and figure out ways to save? What is your favorite quote about success? Do you have one?
Ooh, that's funny. Okay, I got one. I didn't expect you to ask that. I'll say this. There's no such thing as luck. It's when preparation meets opportunity.
Love it.
Good one.
One of my favorite quotes. Well, you are just a breath of fresh air and a topic that is usually so intimidating to so many people, myself included. And we cannot thank you enough for coming on the show today.
Oh, guys, thanks for having me. I love what you're doing and spreading the good word, American dream and entrepreneurship. And it's so liberating, so exciting. Over 50% of Americans are working at a job they hate. They literally hate, not just dislike. The Department of Labor statistics are staggeringly sad and depressing. And so let's find that passion inside of us and just freaking go for it. So thanks for having me.
Could not have finished the episode better myself. Thank you, thank you, thank you. Listeners, we're sure you loved this just as much as we did. Your energy is just contagious. And enjoy. And don't forget to leave that 5-star review. Subscribe to our YouTube channel. Subscribe to our podcast at any of your platforms. And we will see you next week on the Aspiring Solopreneur. Take care.